Hey there, what's going on, everybody? Chris Frings, Texas West Capital, coming at you live here just a bit before noon, right? It's 11 a.m. Central Standard Time. Friday, not July, gosh, what is it? January 9th, 2026. I'm still, man, I thought I was having trouble with the year. I'm having trouble with months here too. Today, man, we're going to talk about jobs report. We're going to talk about Bitcoin, Ethereum, and I'm going to bring through, more than a few alt charts as well, and kind of talking about, hey, should you be looking at alts? If you've missed the last, I guess it was last week, right? We had some huge runs last week. Some of them up 100, some of them up 200%. In the first week from January 1st to like January 6th. So a lot of possibility in there if you've been watching. 7 a.m. in Hawaii. I used to live in Hawaii. I used to live on Oahu. Back in the day, back in the early 80s was when I lived there. So it's been a while. So good to see you checking in all the way from Hawaii. Anyway, so yeah, we're going to do all that. Listen, Fibble had intended to be here today, but he came down sick. He's ill. So he said he's going to make it one way or another next week. So he did apologize for not being able to make it in here, but he is just really feeling like crud, guys. So, send him some well wishes for him getting better so he can be back here and share his charts and stuff with you. All right. So how is everybody doing? I mean, here we are now, first full week of January, just about in the books here. We had jobs report today. Jobs report came in soft, right? Jobs numbers did. We were looking at something like 66,000. It came in at 50,000. But the bigger picture there, the bigger note I think that you need to watch is that October and November were both adjusted downwards. They were both revised downwards. So I think it was something like, oh my gosh, here, 170,000 jobs down in whatever it was, whichever one of those months it was, and the other one was like 50,000 jobs up or whatever. But the important thing is that they were revised. They were both revised down, and then we missed this month, right? So what it shows you is there's a slowdown going on in the hiring. Now, if unemployment had popped up higher, right, then you'd be saying, okay, there's cracks in the system. We're really looking bad. But it didn't. Unemployment, which was 4.6% last month, expecting 4.5% this month. Well, in November, expecting 4.5%, slight move down in December. But instead, we got 4.4%. So, that kind of balanced out the other side of it there as far as the jobs go. And that's why you're not seeing like a big, sell-off going on. We've got stocks going up. We've got Bitcoin going up. We've got alts going up this morning. Ethereum is the big alt. But yeah, so, again, if we're looking at that, you have to go, okay, so, it's slowing down, but it's not breaking yet. Okay. And that's the important thing to get there. If you're watching news events, that's the important thing to get out of that. So headline jobs were soft. Let me see here. And again, the trend is kind of down here over the last few months, right? And that's what you're watching there. So it wasn't like, oh, we were just soft this time and that was it. Unemployment rate fell. That was the big thing. So again, if unemployment had risen and you had the weak payrolls together with it, you'd have more of that idea of the labor markets cracking, more of a signal of that. And then you'd be a bit more concerned. But that didn't happen, right? So effectively, we're all right for now. Now, what is this? Usually this is something that happens kind of late cycle. So it's this low hire, low fire kind of behavior for companies. The firms, the companies out there, they're cautious. They're not expanding aggressively. They're not really laying people off en masse, anything like that. So usually this kind of situation, excuse me, sorry about that. Usually this type of situation happens, prior to a recession. Okay. But before you get all freaked out about that, it can persist for a long time. It doesn't mean we get a recession tomorrow. Um, so, if growth continues to slow but doesn't quite collapse, you can think of it more as a drift and not a shock, right? And so again, this can end up being extended out a year, 2 years, whatever, right? As long as that's what's going on there. But the other big thing is that yesterday we noticed that tech was selling off, AI was selling off, Nvidia, Apple, stuff like that. But the money wasn't leaving the market; the money was moving over to small caps. The Russell printed a new all-time high, and so when we're seeing that, that starts confirming that when you're getting the money rolling out of the Mag 7 basically and rolling into your small caps, that's a good sign. That tells us rotation, not the end of the cycle. And so these are things that you need to watch there. As we continue to move along here. Nothing that's going on right now says recession. Nothing we're going on right now says top of the cycle. It says late cycle, but it doesn't say top of the cycle yet. And I know that's much to the chagrin of the 4-year cycle people for Bitcoin and everybody that's been claiming the stock market's topped out for the last, 5 years or 10 years and whatever, and it just keeps pulling back and heading up higher, right? So, again, as usual on here, my suggestion, my advice is to lay off a lot of the nonsense, a lot of and I know it's hard to know what nonsense is, right? If you're not experienced with markets, if you're not experienced with trading and investing, stuff like this, it's hard to really figure out the signal from the noise, right? Most of your large accounts are going to be noise. It's just the way it is, guys. Now, it doesn't mean your little accounts aren't noise too, but most of your larger accounts became larger accounts because they were good at telling you the things that you either wanted to hear or that made you argue, right? And that got them more visibility, which got more people coming in. And so they got this following, not necessarily because they've been correct, but because they know how to engage. And you got to be careful with that. I warn about this every week. Fibbo comes on here, he warns about it as well. Because we really care about whether you guys are successful or not, right? We're not here just to say whatever to get engagement. Lord knows if it did, we'd both have much larger followings online. But for us, it's much more important to give you guys signal rather than noise and to help you think through things a little bit more than what most of what you're going to get fed on social media is. Okay? There's still one idiot out there, and and I don't mean to be mean, but damn it, this person's out there with this Wyckoff schematic, still shoving it around. They say, look at how right I am. Look at how right I am. Break the Wyckoff, all this stupid stuff like that. And this person is so clueless about how Wyckoff works that they think they're actually saying something intelligent. The sad thing is, if you're following them, it seems like it makes sense, but that's because you don't understand Wyckoff, right? And what happens is, if you continue to apply what they're doing with Wyckoff beyond this and whatever, you're going to lose a hell of a lot more money than you'll ever make in the markets. People need to stick to the things that they know how to do. And we're not getting that. Every so often, every few years, Wyckoff schematics make their comeback. And, I do everything I can to try and let people know it's not a pattern matching, system. The schematics are not there to tell you this is exactly how price is going to go. They're there to teach the phases and the labels so that so that people that come up learning Wyckoff have start understanding how to identify the range and how to identify what's likely going on in the range. It has absolutely almost nothing to do with the actual price action in the schematic itself. Often your accumulation and your distribution are going to look almost identical. The only way you can tell the difference is by applying the price action and volume analysis. That is the actual base of what Wyckoff analysis is. So This is just to help you guys out there because I know a lot of you are online, a lot of you are in these social media, and you're going to get fed these people doing this, and I don't want you to get burned. Okay. The worst thing that can happen is they put up the schematic and price follows kind of what's going on. And then they're like, look at how right I am. Look at how great it is. It's one time, guys. They won't be consistent with that because that's not analysis, not Wyckoff, and that isn't how it works, right? It's not pattern matching. So anyway, the other thing I wanted to say to you guys is, hey, listen, I recently posted on X a few days ago. Let me see if I can find that post here real quick. Because it got very little love, which tells me people don't really understand it. Let me see here. Oh, I've got, yeah, that's right. I pinned it there at the top of my thing. It said, markets are not driven by information. They're driven by who's structurally allowed to act on information at a given moment. I'm going to say it one more time. Markets aren't driven by information, okay? They're driven by those who are structurally allowed to act on that information at a given moment. What does that mean? Now, see, here's the thing. I've had something like 7,000 people see it. I've had like 12 likes. Again, this tells me that people aren't understanding it. And so what does it mean? Well, what it means is there's information all the time. I've talked about this so often, right? There's information and price action all the time, right? But people come up and be like, well, earnings, it was a double beat. It looks so great. Why did price tank? Why did price drop 10% right after it was released? It was all great. And the reason is that information alone itself is not what drives the market. It's who is able to act, who's not constrained when that information comes out. So if that information comes out and you want to be a buyer on that stock because that information's good, but you can't because either you don't have the money at the time to do it, right? Or you're in too many other positions to add another position, or you've got to wait to rebalance, quarterly rebalance or something like that, right? You can't do anything. You are constrained from reacting to that news. So the price action is going to be driven by those who can actually act on it when that news comes out. And it may seem like it's just semantics, just a little bit, but if you think about it, there's something really profound in that, right? Because people will tell you, oh, this news, oh, that news. Why you guys probably have heard this. Tell me if you've heard this. Bitcoin, right? Oh, all this is happening. Why isn't Bitcoin going up? Right? Or all this happened, all this good news, why did Bitcoin go down, right? That's a big part of it because it's who can act at that information, right? And it doesn't mean they're always going to act in the same manner, right? Just because it's bullish information or positive information doesn't mean those people are going to buy, right? So again, price action itself is going to be driven by those who are not constrained when the information comes out. Not just because the information came out. Does that make sense, guys? Okay. Well, I hope so. I hope so anyway. Let me see here. So yeah, so we're, again, when it comes to the jobs report and the difference there, right? The unemployment going down and jobs going down as well, instead of unemployment going up with it. So that gives us that, late cycle kind of low fire behavior. But again, the big news is that October was revised from negative 105,000 jobs to negative 173,000 jobs, right? And then, of course, November following it up, it had a revision downward number of jobs as well. And then here we are today, we're missing numbers again, right? So there's now a trend going on there, right? It's not like this month was just something out of the blue, something different. But again, as long as that unemployment came down, which it did, it kind of nullifies a lot of that. And that's why you're seeing price going up, right? That's why you're getting bounces in Bitcoin, you're getting bounces in alts, and we're going to show you those in a minute here. And you're getting bounces in stocks right in there. Now, so what does that mean? Well, I put out a post this morning about the jobs report, and I said that the Fed is boxed in. And somebody asked me, well, what define boxed in? What do you mean by boxed in? And so what I told them, let me see here. I want to make sure I say this exactly as I wrote it here. Yeah, how would you define boxed in? And it said basically what I'm saying is that every new policy move by the Fed now is likely to create a new problem later, and much faster than it solves the old one, right? So they do a policy move, excuse me, in an attempt to solve an issue, but it ends up creating a new issue before it ever actually gets around to solving that old issue, right? So they're effectively constrained. So everything they do now that the Fed does carries some sort of asymmetric risk. So the safest option is often to wait in this situation, but then doing so guarantees more ambiguity, right? And of course, the market hates ambiguity. It hates not knowing for sure, right? What's going on with the Fed and what's going on with rates and what's going on with other stuff. So the Fed's kind of boxed in at this point now, based on the jobs report. And so again, what you end up seeing here is that if you have that falling unemployment, right, that's going to argue for patience. Falling unemployment says, well, now we need to be patient. Sticky inflation is going to argue for caution. So that just really, weak jobs are going to argue for cuts, right? That's what I mean when I say boxed in. That's when I say they're constrained. And any of those things they try to make a policy move toward is going to then likely create another problem before it actually takes care of that problem, right? So, it's kind of when you're looking for clear forward guidance, which especially we'd be looking at, after the government being shut down for, a while there just recently, we're really, markets are really looking for guidance, right? Listen, guys, I'm not here to say that the Fed does anything really. All right. I'm not here to say that the Fed really moves the market. I don't believe it does. I believe the Fed continues to play catch up. But there are a significant amount of investors, institutions, hedge funds, stuff like that, that base their decisions on the on the forward guidance, right? So it doesn't really matter if you believe that the Fed really has control over it or not. These folks are going to act to that, which is what is going to affect the market in some way, right? So we're going to be out here now. Again, there are going to be more arguments about cuts, but I think really at the moment we can probably say that the economy is maybe decelerating a bit. And it's decelerating in a way that's going to defy those simple policy fixes. So it's all about that. It's not about wide open headlines. It's all about that kind of degradation that's happening much lower down, quieter, that people aren't really noticing or paying a whole lot of attention to. So I think it's probably the best way to understand it. But again, the other thing we saw again was yesterday with money flowing out of Apple, out of NVIDIA, basically leaving the Mag 7 and floating into small caps, which is a bullish thing. And again, that could keep this late cycle kind of thing that's happening here, stretched out for a while. So I wouldn't be thinking about, again, guys, I still don't see a top in yet for the markets. Nothing that's going on here, things I'm talking about, none of that is suggesting that the top is in. The people that are yelling for the top to be in are the same people that have been yelling for it to be in, most of them all the way up, right? Whether it's stocks or whether it's Bitcoin. And they've just been doing it based on price makes a high and then pulls back. Or they think it has to follow some same thing that they have a whole sample size of 2, right? Listen, guys, if you're looking for something that you think price needs to probably follow, your sample size has to be greater than 2. Has to be greater than 3. 3 as a sample size is so insignificant, you can't do any real statistical analysis on it. All right. So what it means is basically you're saying, yeah, okay, so the last couple of times it did this, it may do it this time too. That's the best you can say. You don't go, oh yeah, it's definitely going to do it this time. Right. And of course, I'm talking about with Bitcoin, right? I'm not saying the top can't be in, but I'm saying if you're using that 4-year cycle idea is the reason why it has to be in. Again, and people are focusing on how many days between, and it's been almost exactly the same the last 2 bull market tops, right? And so they say, oh, it has to happen now. Well, again, your sample size is 2, folks. Twice. That's it. 2 times. That's not statistically significant. You can't keep trading and expecting it to be like. Now, it doesn't mean there's not a local top. Obviously, there's a local top. But, again, right now, we're still looking at the possibility this might just be a pullback before heading up further, right? We've gone like, 30 somewhat percent? That's it so far. Now, again, it could break down further. I'm not saying it can't. But I'm saying if your reasoning for it having to have been at the top is 4-year cycle, maybe you get it right this time, maybe you don't. But I think it's much more a crapshoot with just a couple of, times that it's happened. Does that make sense? So anyway, let me see. We got that. We talked about that. Trying to think if there was something else I want to talk to before the charts. I think that's it. So, we'll kind of look at that, right? And the good thing about this is that means if you're understanding what I'm saying, that means you're not freaking out about price action. Okay. So let's kind of pull this up here. Let's talk about, oh, I see. I've got it in the wrong place here. Okay. Sorry. Let me get there we go. That's what I was trying to get. So here we are with Bitcoin. Okay. Now, this is basically the weekly pivot here. See it right here where this red line is? It's the weekly pivot. You're getting a rounding bottom right now. Your 12-hour stochastic RSI reset and oversold. It's threatening to cross bullishly right now and break back out. RSI is remaining bullish above neutral here, curled up, wants to try and cross bullishly here, right? So we want to watch this right now, because if this low holds here and we're kind of breaking out above this like 94,000 area up here, then based on the height of this pullback here, that gives us a pattern target right up around this 98,000, 98,200 area. That's this blue line. What is that blue line? That is the 50-week EMA. Okay. So if we can continue to rally up through here, break out above that 94 kind of thousand area, we should be looking at 98,000. Now, that doesn't mean it has to stop there, but it means that's our initial target. That's where we're looking. If instead of breaking out through that, we kind of continue to break down lower, we can look initially at the monthly pivot here, right around this, what is that, 88,686 area. But if we move definitively below that, I think we're likely to target the S1 pivot, the monthly S1 pivot around 82.7. And what'll that do? Well, what that does for here is we have this range. Moves down here, boom, up, up. And that would give us a spring below that range support right into this green demand structure here. And so I would look for that and then look to see if we can get a reversal off that. Because if we do that, if we do break on down and do that, breaking back out above that 88,686 is going to say this is most likely a leading diagonal is a 1. This is an A, this is a B, and this would be a C as an expanded flat. And then it would take off and head up. And that would probably be one of the worst things that could happen for most retail traders, because most are right now believing that price has to drop down lower. And it can. By the way, if it continues to that S1 pivot, it'll probably continue down here through the swing low. And if it doesn't just sweep that, you're looking at 74,000, 69,000, maybe even 65,000. Those would be the targets I'm looking at. Nothing I'm looking at here, though, right now suggests, anything really below 64, 65,000. I know people out there, 40,000, 20,000, whatever. There's nothing going on here that suggests that. Not right now, anyway. Okay. Jump out to the weekly. Look at that. We're oversold here. We're almost oversold here. Of course, the RSI there getting to the lowest point that we've been since way back over here on this weekly RSI back here at the next to the low. This was the low here, November of 22. This June of 22 was the Ethereum low, but Bitcoin, this was the low before this. This became the FTX low. So then you got that bullish divergence where you had lower prices and you had higher, lower lows on price, and you had higher lows here on the oscillator. Yeah. So, but anyway, yeah. So currently, that's what I'm looking at. Here's the other thing, though, guys. Look at this. This is the yearly pivot here at 96,071. If you get a weekly candle, impulsive breakout and close above this, and what do we mean by impulsive breakout and close? We mean largish candle spread. So candle spread, candle body that's larger than these kind of in here, and a spike of volume. So you're looking at volume that's larger than kind of this volume here. If you can get that and a close here on a weekly above this 96,071, the odds are significantly in your favor that this is the low and you're going to head out to a new all-time high. All right. So, again, just to kind of keep it easy, that's all we're really watching right here. Now, we've made some decent, pretty good money here through the times here, rallying up to targets, pulling back to targets. We've done really well at the Trading Academy. But right now, big picture is, do we hold the low here and break out above 94,000, which should get us minimally up to 98,000, 98,200? Or do we not get that breakout, instead break down further? We can look at the monthly pivot at 88,686, but there's a good chance we'll break down decisively below that. And then we'll look down here around the 82,700 area to get that swing low, right? That spring below this range support. By the way, if we do that, that will give us basically a double bottom here. Look for it to rally back up. So really, Bitcoin's not looking awful at the moment here. It's not looking absolutely fantastic, but we are just doing a lot of sideways at the moment. So you don't want to get torn up in the sideways. You don't want to be entering in the middle of a range, but you can look to sell rejections at the range high. You can look to buy support or to go long there at range support area. You can look for that. Let's see here. Can anyone say sideways? Yeah, exactly. Sideways is exactly what we got there, right? But everybody's going to be telling you online how sure they are it's going to be doing one thing or another, right? But we know that isn't true. We know there are no guarantees in trading, right? Because you guys are smarter than that. Am I right? You guys are smarter than that? I hope so. We know we don't worry. We don't think about guarantees, because the only thing guarantees are going to do are guarantee that you're going to lose your money at some point. And I'm quite often, actually. But once you're in the market for a while and you've been through some cycles and you've got some education and some experience under you, what you find out is you're not trying for perfection. Perfection's going to lose you money. You've got two jobs. And I say this every week, guys, so pay attention, okay? Two jobs as a trader. It's not to hit your targets, right? One, it's to use proper risk management every time you enter a trade. Two, beyond that, is just to lock in profits consistently. Nowhere in there did I say your job is to buy the absolute lowest price and your job is to sell the absolute highest price. Think about what I just said. All I said is you have to use proper risk management every single time you trade, and then just lock in profits. Time and compounding are going to do all the work. Okay? It's going to do all the work for you. That's going to do the work to get you where you want to go. You're not going to get where you want to go in terms of the wealth you want to create as a trader or investor. You're not going to get there by buying the lowest price and selling the highest price, because you're rarely even going to get near that. But you will get there. You got a much greater chance of getting there if you use proper risk management every time and you just focus on locking in profits. If you're always in profit, if you're always locking in profit, you're a liar. Nobody's 100%. If you're always in profit, well, yeah, you can be in profit and then not take the profit and have it go back against you and you get knocked out. You lose money, right? I mean, that's the thing. People are going to get, what does retail think? Retail tends to think, what's your win rate? That's what they always ask. What's your win rate? Okay. But your win rate is the least important thing. What is your risk adjusted return? That's what's important. Are you making more money on average with your winners than you're losing on average with your losers? If you're not, you've got no chance at making money consistently. Yeah, like Fibbo says here, he says, take the profit. You can always get another entry. Exactly. But most retail traders are scared of that because they're scared. What if it keeps going without me? And what that says is, I just feel like I got lucky that I got in. I'm not sure I can get in and make money again. If you're feeling that way and you're the market guys, I'm going to tell you what you don't want to hear. Get out of the market. Now, you're not going to listen to me because you think you're smarter than me, and do what you need to do. But I'll tell you what I have. I have 30 years of experience of doing this. So when I say something, you probably should listen. The odds are much greater that I know what I'm talking about, especially with things like that, right? Because I've been there and done that. I've made all the mistakes and more than you'll probably ever make. And I've done it more than once. I'm kind of a hard learner, guys, or I was when I was younger. I made a lot of the same mistakes over and over again. So, I mean, a lot of you might make the same mistake once or twice and then you figure it out, right? Not me. It took me a while. I'm gonna make the same mistake 4, 5, 10 times. But you can still become successful. You can still be in the markets for 30 years, guys. I'm living proof. But you have to change the way in which you view the market and the way in which you view trading. You absolutely have to do that. I'll tell you what, guys, if you're looking for some place to get some really good information for free, join us on Tuesdays. I'm usually part of the panel with Trading Spaces on Trading Tuesday Spaces. And I always put a link up, always put the link up there with the reminder and everything on Tuesdays about it coming up. But it's at 12 noon Central, 1 p.m. Eastern. And it's got myself and a few others, Bits of Wealth, and a few other people on there that give you a lot of really good information to at least get you positioned, give you a strongish base when you're trading. Okay. So, that's a great place to start there. But I'm going to be honest with you guys. I didn't get here just with free stuff. Most of the free stuff I consumed back 30 years ago, first 4 years I was in, was stuff that made me lose money. Most of the free stuff that you see regurgitated by your big accounts out there are half truths or outright lies. A lot of it that even kind of works, if you're new to trading, if you don't understand trading, is not going to work for you because you don't understand the other things it's not talking about. But these big accounts, again, it was stuff that was free when I started. It was the same information that was passed around. Now it's just available everywhere online for free. And so your big accounts, they just kind of get that and then they say it again on their account. And you guys fall for it the same way the rest of us fell for it when we first started. But most of that retail way of thinking doesn't work. If it did, most of retail wouldn't be out of the market, right? Think about it. It's said that 95, 99% of the market is out in the first 3 months of entering, having lost everything, right? And often more, adding more money in is losing that. If that's the way it is, and the biggest bit of information out there is this same free information, well, what do you need to do? You need to do something different, right? Don't keep doing the same thing that they're doing if you want to be successful. Does that make sense? Was it Mark Twain that said, doing something over and over again and expecting a different result is the definition of insanity, right? He wasn't wrong. Any ideas for what will come now with the Venezuela move? What do you mean? As far as what? Trump's got a lot of stuff going on. He's been, if you guys are subscribed to the Market Breakdown, my free newsletter, I talked about a lot of it here yesterday and today, because Trump is out there. Remember, he said 2 days ago, Wednesday, he said, hey, guess what? Defense companies, I'm going to limit your pay to $5 million. You're not going to be allowed to do buybacks. You're not going to be allowed to pay out dividends until you get your act together and fix these issues that I see. And so the defense sector took a hit, right? There was a sharp move down on Wednesday as a result. What happened yesterday? He comes up and he says, hey, you know what? Forget $1 trillion. We're going to give the defense the biggest budget it's ever had, $1.5 trillion. It's going to be the dream military. Anything you want, basically, you're going to get. And what happened to the defense sector? Popped right back up, right? These are knee-jerk reactions, and for the most part, they don't establish trends. Okay? So as far as what the market for Venezuela, I don't think it really does anything to the market. I think oil, I've been talking about oil going down into the 30s for, a few years now. We're still headed that way. I don't see any reason why it doesn't. Just structural on the chart. What do you think about the rumor they have something like $60 billion in Bitcoin? Yeah. That's the other thing, a shadow Bitcoin, 600,000 coins, right? Rivals strategies treasury, right? Maybe. I don't know. I don't know anybody in there myself personally, so I don't know if they do or they don't. But according to what Trump said previously, remember they're going to expand their Bitcoin holdings, but it has to be budget neutral. It can't be, you can't be like using the money to get out there to get it basically from your budget. So, if they do and Trump gets it, probably added to the U.S. reserves, right? U.S. Bitcoin treasury there. What other things? That minerals, right? Rare earths they've got there supposedly as well. I think when it comes down to it, at the end of the day, I think the Venezuela move. I'm bringing, I constantly am brought back toward the idea of the Monroe Doctrine, which is basically the U.S., basically this idea that the U.S. is going to keep communism and other competing ideologies out of the Western Hemisphere, basically, right? So when you think about Venezuela, and then you think about Greenland, apparently Trump is, said that he's going to buy Greenland, right? It starts making a lot of sense. It starts making a lot of sense with it, right? People are like, okay, well, Venezuela is all about the U.S. getting their oil. Well, the U.S. doesn't really need Venezuelan oil. The U.S. has one of the largest proven reserves in the world. We don't need the Venezuelan oil, right? But who gets a lot from the Venezuelan oil? China, right? So if you cut off China's access to that oil, well, then you kind of strong arm China a bit. All of a sudden, they don't have that oil that they need to do all the things that they say they want to do, right? So effectively, you're trying to keep China in that area from exerting their communist ideals over to the Western Hemisphere, right? Does that make sense? So, I think when we're looking at it, I think that's the bigger picture of it. I think it's way too simple to say, oh, the US just wants the Venezuelan oil. Oh, the US just wants rare earth minerals. Oh, the US just wants the 600,000 Bitcoin. That, by the way, isn't even proven that it's there, right? But if you think about everything that Trump's been doing in this presidency, right? It really looks a lot like it's going back to the US sovereignty, right? The idea that we spend 70 plus percent, that we send 70% of the money that the UN has, right? Trillions of dollars a year. I mean, that's ridiculous. That's ridiculous, right? I mean, what are we really getting out of that? Nothing. So I don't know, when you're thinking about that, it seems to make much more sense that the idea of Venezuela and Greenland is this whole basically Monroe Doctrine plus, right? It's this idea that we're going to root communism out of the Western Hemisphere, that we are going to be the protector of this part of the world. Now, a lot of people aren't going to like that because they're on the other side of the world and they're dealing with Russia and they're dealing with, China. I mean, make no mistake about it. We went into Venezuela and basically turned off the lights for a few hours. None of their Russian or Chinese air defense systems, communications, none of that worked for like 2-3 hours. We basically pushed the buttons, turned it off. So, Putin's going to talk big. China's going to talk big. But I don't know. Again, if I look at it, it's hard to argue that the biggest dog in the yard is not the U.S. And so, being that and then just kind of protect this Western Hemisphere, I think that's going to do. And I think what that does is that does a lot more positive for the U.S., right? Think about it. We've got a lot of great people, Central, South America, North America, everywhere, right? If we can root out all the nonsense that's going down here and that's screwing these countries, I mean, maybe you think it's right, maybe you think it's wrong, right? But in terms of what is the best thing for the U.S. in the long term, rooting out all that nonsense and doing what we can to help these governments locally prosper is going to make the U.S. a lot stronger, right? Rather than having communism and dictators and everything down in Central and South America, ruining these economies, ruining these people's lives, right? So that they feel like they have no other choice but to leave their country. 8 million Venezuelans left Venezuela, not because they wanted to leave, but because they felt like they had to, right? And where did they go? They go to the U.S. So, I mean, not just that, but also better trade agreements, but all this stuff becomes better for the U.S. if we do it. So, again, you're going to have your opinion and whatnot. I just think if I'm looking at this, strategically, it makes a lot more sense that way rather than just, Venezuela oil, right? Let me see here. Russia was supposed to go and send nuke subs to protect the tanker, but the U.S. took it anyway. Yeah, that I think now, really, guys, internationally, I think that's the big story right there, right? So, there was that Venezuelan tanker, right, that the Russian military was escorting, basically, and the U.S. came in and said, "Oh, that's ours." Now you have to remember there is a big thing going on right now. You got to remember when Chavez was in power. Remember, he nationalized the oil industry there. Well, he didn't nationalize it. What he did was he took all the like Exxon, Mobil, all that kind of all their stuff. He took it all. He stole it, right? And so they went to court, international court, and the court said, "Listen, Chavez, you lose here. Venezuela owes them $300 billion or $300 trillion, whatever it was, 300 billion." So these oil tankers right now that the U.S. is taking and selling the oil from, or plans to sell the oil from, that I believe is going to actually go to pay the American oil companies that are due that money from Venezuela per the court. And this isn't U.S. court. Remember, this is international court. So don't come at me with the U.S. No, it's international court, right? Um, so yeah, when we think about it, I think again, guys, I want to, caution you from getting too caught up with the stuff that's online because most of it, most people online don't know what they're talking about, guys. They don't have any real experience, right? But they make it sound really big, and it sounds like, oh yeah, like it makes sense. But when you're talking about geopolitical stuff, like us swooping in there in the middle of the night and taking Maduro, which by the way, everybody knows was not he was not he shouldn't have been in charge, right? He lost the election. He just refused to leave office. So it wasn't like he was a legitimate ruler. That would be different, right? If we swooped over there and picked up Putin or something, that would be different, right? He's legitimate ruler there. So I mean, you have to get beyond all these simple little sound bites, and it's this one little thing that everybody talks about. Geopolitically, it's so much more because there's so many more moving parts, right? So what does that do for markets? I don't think it really does much for markets. Here's the thing, guys. If you haven't been paying attention, it just seems like no matter what happens, the market really doesn't react negatively. When Israel was attacking Iran, prior to the last few years, that would have caused our stock market to tank, right? It didn't. It was barely blipped. We go over there to Venezuela. We do this. We come back. What happens on Monday when the stock market reopens? Hey, why don't we go up? We'll go up. And so, when you look at what does this do for markets overall, I don't think it really has a lot of effect, or at least not any real negative effect on the markets. We would have seen that probably already happening, I'm thinking. So I guess I would just say, if you're listening in here to me and you're giving any grain of salt to what I'm saying, think a little bit bigger than one single issue. Think a little bit, think a few steps further out. Now me, those of you that know me, I do have a certain level of education, right? I've got a master's in applied psychology. I've got a master's in homeland security. I've got a law degree, right? So I don't just talk out of my rear end, right? A lot of this has to do with understanding the way these things work, but also understands the way human beings work and, how to think about it, right? But it doesn't mean you have to believe me. It doesn't mean you have to believe me. But I would just suggest that if you are of it's this one simple little thing is why you think A and B are happening. I think, think more beyond that. Look for more beyond that and see if that starts making a little bit more sense to you. Okay? Let me see here. Yeah, it did change its flags, that ship, and turned off its transponder numerous times. Yeah, exactly. Did you get those through Trump University? There's always got to be somebody, right? Listen, I'm not a Trump supporter. I'm not a Trump negator. I'm pretty much just gray when it comes to Trump himself. But again, looking at the bigger picture, looking at what's going on, I think it's where you need to look. So, if you're just, I hate Orange Man because I hate Orange Man, then you're not going to add anything to anybody's conversation, right? If you go out and you go, okay, well, let's take a look at the bigger picture, what's potentially going on here, then maybe you've got something to add. Yeah, again, I feel bad for people that are very one-sided like that initially. I mean, you should be out there. It's the same way we look at markets, right? People are either extremely bearish or extremely bullish, but nobody's really paying attention to what's happening, right? Nobody's really paying attention to what's going on with the price action. Everything they look at the price action is based on what they believe, what they think they believe, right? What people call their beliefs in what has to happen with price. Okay. So anyway, that's Bitcoin there. Let's jump up Ethereum real quick here. Ethereum, we'll keep it clean. Again, same basic structure as Bitcoin. Looks like we've got 5 waves up leading diagonal. We got 3 waves down. So either this is 3 waves up, and then we'll come down and sweep this low here at 2771, which is what I'll be looking for if we decisively break down and close below this 3044 level here. But if this holds and we break up higher, well, then things start looking much more interesting, right? So locally, based on the height of this pullback, we're going to rally from here and break out, right? That's going to give us a 34.66 target. And the idea would be then at that point, we'd look for the pullback. Okay. And, most likely it would come down here right around this 3,000 to, I don't know, 3,200 area. So you kind of get that move up there and then a pull back to there. And then maybe off, or even it could do a little sideways and then take off. But if we're getting that breakout higher there, again, with that monthly pivot holding a support, that's a big thing. But look at this. We're right here on the yearly pivot. So what are we looking for? We're looking for, from this point, probably not this week, maybe next week we could get one, impulsive, big candle here. We're looking for a large candle spread compared to these kind of candles here. We're looking for a spike of volume greater than this kind of volume here. And if we can do that right here, say next week or something, that's going to go a long way towards saying this is likely the low and we're heading up to a new all-time high. Much the same way that we're looking at with Bitcoin at the moment here. Okay. So again, you can just keep it simple here. You don't have to worry about every little move and whatnot. You can keep it on the daily. And that's what I've been telling our students, our, members and everything over there at TWC, at the Trading Academy, is let's just focus on this larger thing here. Does it do this, which gives us that target, or does it do this, which gives us this target down here or something, right? That's all we're doing. And it makes life a whole lot easier when you're just kind of doing sideways and trying to figure out what's going on. Right? So, if we're looking at this as a 1 and a 2 here, and this is 1 coming up here for wave 3 heading up, well, this says we've got minimum expected wave 3 target at 4,080, minimum expected wave 5 target up here at basically $4,400, which gets us pretty close to the all-time high up here. And most of the time, you're going to get 5 waves up into the previous swing high, 3 waves back, and then the next move breaks out. Your wave 3, your participation wave, is the breakout. Okay. Let me see here. Bitcoin dominance. Man, oh man. We just are basically sideways from back over here in mid-October, guys. So almost 3 months, we've really just kind of been sideways here. Now, when I'm looking at this, I'm saying, okay, well, we do have higher lows here. We do have lower lows here. So that gives us hidden bullish divergence. And so here we're starting to move up a bit. We got a lot of room on our RSI and our stochastic RSI on the daily for this to continue up. So if we can get a daily candle impulsive breakout and close above 59.50 here, we should be looking at 60 as our next one. And potentially up to the yearly pivot up here at 60.75. And once again, we get to that point where we go, well, if we get to that, I said weekly, it's the yearly pivot here on the weekly time frame, right? If we can impulsively break out and close above that, that suggests that the low is in there. The low is in here. Now, I don't know if this count is correct here at the moment up in this area, but we're interested in really what's going on here. But yeah, so I mean, as far as this goes, well, we had our bullish divergence down here at the low, led to this nice rally up and then pullback. And like I said, it's just been a lot of sideways on the support area here, right? Where is the support? The same place all the way across from back here in September of 24. Right here. And then again here, resistance here, and now it's support. So it's a good area to watch. If we can get that and pop out, things start looking really interesting as far as Bitcoin dominance goes. But make no mistake, guys, there's nothing that's happened since January of 24 when it comes to alts that I didn't say at that time was likely to happen. So it's still up there on Twitter, X, whatever. You can search for it and find it, I'm sure. But I've talked many times about this idea that with the Bitcoin ETFs coming in, that was going to materially change what was going on with alts, and that the odds were likely that we weren't going to see like an alt season the way we were used to, but that we were going to see pockets of alts, sectors of alts that would rally and you could make money on while Bitcoin continued to go up. And that's what we got, right? We had memes for a while there. We had other ones, right? So while Bitcoin continued to go up, we had those continuing to go up as well. Now, that doesn't mean that that doesn't mean that that we won't have an alt season like have come so many cycles before. But again, my position remains here 2 years later, right? Is still the same. I'm going to look for sectors for alts, sectors of alts to go more than anything else. And, overall, if we can get the alt season like reasonable, great. But I'm not banking my like future on it. Doesn't make any sense, right? So we'll see here. Let me see. MOG was one that I gave I do a market wrap every night for our members, our operators, right? They're market operators. And, usually I'm picking up a few, what do you call it? Stocks, and talking about futures, and picking out a few alts as well. So, back when we were down here, I told them to watch that and look for at least a run up to the range resistance, because with the volume and the price action in here, it looks like this was going to be a spring down here. So sure enough, if you were in here around 22 or even 23, up to 33, that was 30 somewhat percent there, right? So that did well. We popped up. We've come back down to the monthly pivot here, or I'm sorry, the weekly pivot, 12-hour reset and oversold. I'm looking for a move up here from here. If we can get a move up that breaks out above the 35 here, I'm looking for 42 as my target. And then from there, I'm going to watch for a rejection and see if we can pull back down here toward 31. And if we can, I'm going to look for a reversal there to kind of have this thing really breaking out higher here, heading up toward 55, 60 and higher. But this is MOG USD. So if you're looking for an interesting chart, I like that. As long as this holds here, we're breaking out here, we should be going up. So that would be, breaking out above 35, going to 42. It's almost 20% that you could make on that. NEAR is another one that I've been talking about here as well. Again, pulled back here to the weekly pivot, getting a rally up here. Based on the height of this pullback, as long as we continue to rally, as long as this holds the support here, we should be looking up here toward basically $1.96. All right. So that would be my next kind of target up there on that. If we can get rejected around there, I'm going to look for a pullback to $1.75 or potentially $1.69 here. And then I want to look for another breakout higher. Sushi, look at that. Another one, same idea here. Rallied up to the R1, came in sideways, rallied up to R1 pivot, pulled back to the pivot, trying to rally back up. Based on the height of this pullback, if we're going to get that breakout, we've got a target of basically 40 cents up here. The next one we look at. Get you another 10 to 15% on that. Whiff, man, it's a nice little spring, it looks like, down here. Nice rally up. So we got our jump across the creek, back up to the edge of the creek, it looks like, at the pivot. Looking for this to rally and break out higher. Now, right here, based on the height of this pullback, that would give us a target up here at 0.583. But you just want this low to hold. As long as this low holds, that's my minimum target there I'm looking at. That up there. And then we'll look for a rejection there. It kind of brings it back down here a bit before it really takes the big move up. A lot of these charts are going to look like that, okay? You have a long on MOG? Nice. Let me see here. Pepe was not. Look at these big moves, guys. These huge moves. here. You know, again, from January 1st here, everything was on January 1st. A lot of them big moves up, right? This one, same kind of idea. Pull back here. As long as this holds this support here, break out above this, you know, 0.0000, whatever, 709, that should give us a target up here based on the height of this pullback around 807. And if we can get rejected around that 807 area, or just a little bit beyond that, we're going to look for a pullback down here toward, you know, 585, 615, this kind of area right here. So the idea is, you know, we kind of move up here, pull back here, and then take off again. It's Pepe. Bonk, another one. Look at that, same idea here. Now, none of these say that this definitively has to happen. They could break down. And if they break down, those upside targets are not legitimate at that point, okay? All these are legit as long as the low, the pullback low here holds. And so if this pullback low holds, based on the height here of this pullback, we'd have a target of the 1529 here, 0.00001529. Pattern-based target based on the height of the pullback. So what does that mean? That means, listen, if you were thinking you want to get long on these, the idea is, well, you could, if you like what I'm saying here and you agree and you think maybe, hey, that's what's going to happen, you put the stop loss just below the swing low, not way down here. Stop being scared to get hit. If you're using proper risk management, you're not going to be scared it hits your stop loss. Okay? If you're scared it hits your stop loss, it's going to hit your stop losses because you've got way too much money at stake. But this is what you do. You just do it here. And if we were to hit this target, that would give you a 9.2R. That means if it hits your target, and if this is just $1, right? Basically, you're saying you're risking $1 here for $9.20. Times however many of them you put in there. If you do $100, well, you're risking $100 for $921. You're risking $1,000, you're risking $1,000 to make $9,210. If you're doing that, you shouldn't be scared if price hits your stop loss, because it's very minimal for your capital account. The problem is you guys go in there and you put everything you have in and just pray and hope that it goes up or goes down, whichever way you're doing it, right? But that doesn't get you anything. Again, this doesn't guarantee this is going to happen. But again, I'm looking for this low to hold here and to get that breakout. And if we do, then that's my initial target up there. Here's our AVAX trade right now, our AVAX trade. This is one we've done there with the market wrap. Looking for the breakout up here, which was over here. Stop loss down here. Target. We've got some temporary targets along the way. We got 1562, 1822, 2106. But if I'm correct and this is going up, I'm looking to get up here around $31.50. So getting in around 14 here, ride that up for that. If we're breaking down below $12, $12.08, right around there, I'll be done. I'll be out. Take my 1% loss, not worry about it a whole lot. But again, the idea is we've got the pullback here into the weekly pivot, looking to get the pump up through it there as the next move. But see, this is the great thing about alts. So many of them look the same. So you can find this setup and then you can go look and see, well, maybe you don't want to trade AVAX. Maybe you don't want to, for whatever reason, trade Bonk or Pepe or Whiff or Sushi or something like that. You can just look for the same type of setup on another alt and just do the same thing. Just measure out with your retracement tool, measure out the height of the pullback there, and look for that 1.618 target. Not fib extension, fib retracement. Ape. Ape was one of the ones that didn't do as much from January 1st, right? It didn't go up as much. You know, but like 18%, 19%, 20%, something like that. Wasn't 100%. It wasn't 200% like XCN and stuff like that, right? But got the nice move out. Pull back to the top of this range here. The weekly pivot. Looking for the next move up. Based on the height of this pullback, it gets you this 0.254 to 0.258 area. I think it might overextend a little bit to that, but at least 0.254. That's what I'm looking for the next move. If we get rejected, I'm going to look for it to pull back down here toward 21, 22 cents. And then I'll look for a reversal for it to head back out. Let me see here. H bar, same idea. Pull back here. As long as that low holds, looking for a pattern target of 0.14565. That's my initial target. Notice it hits right exactly at the high volume node. It's not, Elliott wave isn't magic, folks. Elliott wave's just going to take you to those levels of support and resistance, those areas of liquidity. That's all it is. All right. ADA. So ADA, we were looking for either a rally up and a pullback or a rally down and a pullback here. Let me see. So right here, the best way to look at this is if we hold this low here, we break out, that'll give us a target up here of about 0.4686 at least. Potentially getting up here around 0.5325. But our initial target is at 0.4686 there, which gets us then just back to the top of this range here. Right up into that. But if we can get up there around that 0.46, 0.47 area and get rejected and we get to pull back down here toward, 39, 40 cents, then we should be looking for a big move out next to kind of run up through all this down here. So run back up there, probably up here around 0.64, 0.6845, and then 0.7289. Those are my targets on that. INV USD here. Again, pull back down here. As long as that low holds its support, then, breaking out here above, it's like A, B, C is what it looks like here. So breaking out kind of above this $30.85 area, 80-cent area, that'll give us a pattern target at 32.55. So minimally, that's where I would be looking, for this next kind of move out here. Beyond that, look at 34. And then up here at the range resistance up here at about 37.40 or so. And those would be my targets there. As long as that low holds, we get a rally from there. Oh, SUI, we had so many things going on here. So SUI, if we hold here and head up, that gives us the $2.20 area. That gives us the $2.20. So basically this R3 pivot, which is what? Previous swing high. It's the previous support resistance level. Support resistance. So that would be the target right there prior to the low volume node. So if we can rally up here and do that, that's what we're looking. Otherwise, if we break down on this one, I want to look down here around $1.61, $1.62. $1.61 to $1.64. That area right there is where I want to see, can we get a reversal? And if we do, so if we go here, we break down like that, we just need to break back out above this $1.85, 1.8544. And that should have us, again, heading up here probably toward this kind of swing high area up here around $2.70 at least. Doge, another pullback into the pivot. Again, looking for that pivot to hold. As long as it holds, well, this swing low right there at it. As long as that holds, we'll look for a move up here to 0.16760. All right. Beyond that, we would look at basically 19, almost 20 cents here, 0.1995. And then basically 0.214 is our next targets. That 0.214, as you can see, gets you right here. Previous resistance, right? Keep going south or keep going to the side. Resistance, support. So a very likely, a very smart target if we can get the breakout there. But again, like these other ones, you're having your range here, you had accumulation, you had a spring, jump across the creek. I mean, it's the setup is perfect there. And you're going to see this across so many of them, right? See across so many of them. Let me see what's going on with Litecoin. Litecoin, again, same idea. If we're holding this, let me pull this out of the way here. As you can see, it pulled back to the weekly pivot. So as long as that pullback holds its support, breaking out higher should have us looking initially at 87.87. Okay. If we get rejected around that, basically $88 to $90 area, we should look for it to come back right probably around this $80 to $81 area. So you get this move up, pull back here, previous resistance support all the way across here. And then you really take off. And ultimately you end up at least getting up here around 110. And then I got another target up here at 126 on that. Hondo, same idea. Pull back to the previous resistance at the top of the range here. If we can hold that. It gives us a 0.153 target. If we do break down further, I'd look for it to see if we can get a reversal here at 38 cents. If we can, then we just need to break back out above this kind of 41 cent area, and that should signal that we're going to break out higher. Other targets, if we were to rally from here and keep going above that 0.5134, I would look at 0.574 and then 0.6158 as the next kind of targets on the way up there. So yeah, a lot of different potential charts here, all looking pretty much the same. You guys are seeing this, right? Oh, always so quiet. So many of y'all watch it and barely anybody says anything. But yeah, so lots going in there. But I mean, right now, as far as what we're looking at, look at FIS up 19.5%. Look at that right there. My targets on FIS are 0.04, 0.0459, and then up here at 0.086. I don't expect them to hit overnight, guys. Don't think that, but as long as we're breaking out higher, that's where I'm looking on FIS USD. What else do we got here? I'm just throwing you guys charts, man. Adam's breaking out. Nice, nice. So Adam's getting us that breakout. We didn't get the pullback here. Man, oh man. Well, if I'm to look at this as a 1 and a 2, that would give us 5 waves up here around 2.664 at least. 2.743 and then 2.87 would be my targets on that for Adam if it continues to push up through it. Flow's looking interesting to me. Looks like we might have a spring here. We're trying to break out through. I want to see a close here on the day or on this 12-hour here above this EQ of the range here. But it suggests we're going to get a run up here to about 11.5 cents. If we can clear out of here, break out and close above Basically, it's the pivot, but a little bit swings here right above it, basically above 12 cents. There's no reason I don't believe that we shouldn't at least be looking up here at $2.17 in this area. And if we're up there, the odds are overall we're going to continue up higher here toward a 29-cent target area. That's flow. Tia again got the pullback here. We got the move, but then we got the rejection. So we're going to have to watch it. But if we hold this low, pattern target up here is 66 cents, which puts us where? Right here. Right into this previous resistance area here. So we got the wick and the wick and the candle body and the wick and the wick, candle body here, wick. All right there. So that's a pretty good target area. If it's going to get it up there, we'll see if we can get follow through for it to do it. But that would be the next one I'd look at there. So yeah, that's all I look at. I think I looked at enough there, guys. I think I gave you a ton of charts. But at the end of the day, guys, should you be looking at alts now? I definitely think you should. That doesn't mean you just jump in blindly. Understand what you're doing. If you don't know what you're doing, join us. Texas West Capital, right? So members.texaswestcapital.com. Join us over there. Join the Liquidity Cartography group. You're seeing a few of them talking in here. But you get everything I teach, which explains to you how markets work and how liquidity forms and how to find that liquidity. And how to, even when you're in blue sky territory where you've never been before, right? But I also teach you a lot about market psychology and trader psychology and these things that are going on. I teach you about systems. I teach you where the wrong parts of your thinking are as a retail trader and why that's losing your money and how to do it otherwise. I trade live with you 3 times a week in the mornings, Mondays, Tuesdays, and Thursdays. I trade, we do 3 classes every week, hour long, or this last week, they kept me late. I did an hour 20, I think, with every class this week. But we do Wyckoff training on Mondays. We do Elliott Wave training on Wednesdays, and we do, price action training on Wednesdays, and we do Elliott Wave training on Thursdays. And even though that's really where they're focused, they still incorporate parts of the other things so you can understand how it all comes together. Because when you understand how it all comes together, then you start seeing the market for what it is rather than what you think it is. Makes it a heck of a lot easier to trade, right? Also, you get access to everything that Fibbo does with his threshold theory. So, there's a lot in there. There's more stuff I'm not even thinking about at the moment here. We've got hundreds of hours of educational content in our vault there that you get access to. Just so much. And then you got great people. I think it's probably one of the better things of what we do there is the core group of traders that we have there. They show up at all the trainings. They show up at all the live tradings. They're constantly leaving comments and charts and everything in the chat sections. So, if you're tired of screwing around, guys, honestly, if you're tired of screwing around, if you're tired of, excuse me, mouth's dry here. But if you're tired of screwing around, if you really want to learn, if you're serious about it, we only want to work with serious people. And we don't want people to come in and think, oh, just because they came in that it's automatically going to happen for them. No, you got to put in the work. I'll bend over backwards to help you out. Answer all the questions you have. I expect you to have questions. I encourage questions. Because there's no way in hell you're going to come in and go through this and not have a single question. And the problem is, if you go through stuff that you're trying to learn and you don't ask questions, how are you going to learn? You're not. Because everything you build above that is going to be built on shaky ground because you're not sure, because you never asked the question. These guys, they're telling you what's up. So we'd love to have you there, okay? And see, even Fibbo says, look at Fibbo even says, me too, ask away, use this as a resource. Man, we are so serious about that, guys. Most of the nonsense that y'all are looking at online because it's cheap or it's free, they treat you like you're bothering them because you're asking questions. Right? Why? That doesn't make any sense. Are they here to teach you or are they just here to take your money? Sounds like they're just there to take your money. My man Unstoppable here. Look at it. It's a great group. See? People will tell you. Look at even Colton here. Oh, and that reminds me, before I go, I think Colton did ask for a chart earlier. Let me see here, Colton. I'm sorry, man. I know now I remember you saying something here, I think. Let me see here. Oh, Colton, where is it, man? If you remember it before I find it. Oh, I got two here. Okay. Solana and MSTR. I'm going to look at those two, and then I'll be done with the charts here, guys. Okay. What's my favorite Bitcoin miner right now? I like Iron still. That's one of my favorite ones. Some of the ones that have been doing better lately, Bitfarms has been doing really well. If you guys just want weekly chart updates and miner information, I do have a really inexpensive newsletter. It goes out every Sunday evening. It's called the Bitcoin Miner Stocks Report. You can go to bitcoinminerstocksreport.com and sign up. It's like $20. But that'll give you 17 miner charts, and then it'll give you the WGMI, which is the miner index on there. And so, every week I update the charts. And then there's a hash and hedge or a hash rate. God, I can't think what it's called here. Hash and geopolitics section at the bottom, which tells you what's kind of going on in the miner world. And if you're following miners and they issue releases and stuff, what words and things to look for and why, let you understand what the hash rate is, stuff like that, kind of get you ahead of it. I was the guy basically 2-3 years back that was telling everybody, watch miners because they're going to start pivoting. A lot of them are going to pivot toward hosting AI data centers and stuff like that. And sure enough, here we are, right? So yeah. Oh yeah, see, I'm on that newsletter. It's great. I appreciate that, buddy. I appreciate that. But yeah, right now I think Iron's looking pretty good. Like I said, Bitfarms been doing pretty good. ARBK, man, I would just kind of stay away from that one. It had it's been really crappy for a long while, and then it had that good little push not too long ago, and then it just completely crapped the bed again. So that one, that's one of those ones that, maybe, a lottery ticket, if you wanted one, maybe it might do it because it's so beat down, it could really take off, but I'm not interested really in myself at all. But we do update it every week with those other ones in there. Yeah, so Solana, excuse me. Let me jump in here and then we'll look at strategy real quick as well. God dog it. You know what? Let me pull up XRP real quick since I've got this here. I wanted to talk about that. Look at that. XRP popped up about 31.5%. But it did a good move here. It did a good move, you had your range, boom, pop out. So if it keeps coming down further, we'll look around this $2 area as a target. Let me see here. Yeah. And then after that $2 target, we'll look here a little bit lower at about $1.94. As long as this $1.94 holds, we should expect it to break out higher. So worst case scenario, excuse me, is if it pulls back to this $1.94 area, but reverses there, then we should be looking up here about $2.96.5 and then $3.21, generally speaking. If we can get a rally from where we're at right now instead, that would give us a pattern target up here about $2.62.5. Where does that get you? High volume node, local high volume node, right prior to the low volume node, resistance. It's the resistance area right here. So it makes sense. So we'll see if we can get it. But if we can, that's kind of the way I'd be looking at it. Let me set these in order here. So maybe I can find Solana easier. Solana. I know I've got it in here somewhere. There it is. All right. So Solana hit my first target, or just about there. First target's right there, down 143.55. Almost hit it. We hit 143.44. Let me see here. Let me get rid of some of this stuff. So again, we were range bound here, broke out of the range, pulled back. I could see this breaking down potentially. I would look at the $1.30.5 area here. That's the weekly pivot. And if it goes below that, kind of like $1.29.5. So basically $1.29 to $1.30 area. If we're going to break down. And then from that way, I would look minimally around 150, about 152, gets us the top of this low volume node. Let me see here. And then after that, I think we see a pullback at least to this $1.36 area. If we get rejected around that 152. Yeah, right here, potentially around $1.34 or so on that pullback. Kind of just keeping us around here. If we do rally from where we're at instead, this target will be a little bit closer. It'll be about $150, which again, still kind of gets you that $133 pullback. So either case, whether we break out here and we do that, or we pull back down here and then we do that, if we can get rejected at that target area, should get us around that 133, and then we'd be looking for a nice big move up. In this case, if we were maybe doing that, you'd be looking up here. Yeah, basically about 187, and then $200 would be the targets. Again, resistance levels, right? And then, like we said here, MSTR, right? I know somebody's asking for it. Sorry, it took me a little bit to get to you. MSTR is interesting at the moment. We kind of dipped below the range support, rallied up, got stuck there at the monthly pivot, and we've just been kind of range bound in that. I hate that the stochastic RSI on the daily is overbought like it is, and RSI can't even get to the bullish side of neutral. Doesn't mean it won't, but it means I'm cautious on it at the moment. But this yellow range is kind of where I was looking for MicroStrategy to pull back into. This range right here. Actually, you know what? Let me do this. Let me put this on all the charts here. But look at your weekly RSI here. Oversold, coming down here. We could be nearing a reversal. Get a bullish cross and a breakout of oversold. Stochastic RSI, also bottom out here oversold. And, just basically kind of look at, this is where most of that price action has happened. So we kind of hit the EQ of that area. So I'm really interested in that. But overall, we should expect that this triangle should contain price. So even if it continues to push down a bit lower here, we should expect it to find a reversal somewhere within this this triangle. And so then it gets this A, this B, and this C here, right? So it looks like maybe like a 1, 2, 3, 4. And like I said, it could break down a little bit further here for a 5. But I think we're probably closer to a low than not. If we are to break down further, you can see that the monthly S1 pivot is about 136. So that would be the target I'd look for. So if we do get like this breakdown here, and then it rallies and breaks back out above 187.26 here, which is the monthly pivot, that's likely to indicate that the low is in and the reversal started, and we're going to head back up here, potentially new all-time high, $782.50 or so is my current target. That's what I'm looking at right now. So yeah. Oh, what are you saying there, Fibbo? Your SPY 4-hour hit your take profit target at 7,010. My next target is 7,089. What is yours? Yeah, you're welcome, Colton. Always, man. What are we looking at here? S&P. Look at the E-mini futures here. So, I mean, overall, I'm looking up here around 72.14 as kind of the next big target. Locally here, though, if we are to measure out the pullback here, that gives us a pattern target Up here at around, yeah, that's my pattern target. That's that one up there. Okay. Let me see here. Locally, if we see this pullback, if we measure that out, I would be looking at a pattern target of 7,067. Looking at this one right here. Well, let me zoom in a little bit here. Look what a great candle that is today. I would look minimally, I think. If we see that as a 1 and a 2 there, you said, what were you looking at? 74? 7,089. Okay, I think it's what I said I had, right? On that bigger target. Yeah. Look, if this is going to be a 1 and a 2 here, which I'm not exactly sure it is, I'm not going back into accounting, but that would give us 5 waves up here again at my 72.14 target area still. So, but locally, what I was saying there, look at 7,067. So pretty close to what you were looking at there. Remember, these are just pattern targets. So price often does go a little bit before, a little bit after, but generally speaking, gives us a place to start, right? So yeah, I like your target, man. All right, y'all. As always, remember, the only thing you control is how much you lose. So please keep working on that risk management. We'd love to see you at Texas West Capital. Again, members.texaswestcapital.com. And you can get a whole bunch of knowledge. There's stuff you are just not going to get anywhere else. We don't teach you guys, news, narratives, and all that other stuff that's always chasing price. Narratives follow price, guys. Don't forget. Fibble and I are price first people. We believe in the idea of social mood leading everything. And the quickest way you understand social mood is through their buying and selling behavior, which is price. Narratives come later. All right. So, we'd love to welcome you there. If you do, say hi. Say hi. We'd love to hear from you. We are really there to help you out. Ask questions along the way. Go through the stuff. We've got great resources with other traders that are in there that have been with us for quite a while. They'd love to step up and answer questions and talk charts and markets with you as well. There you go. By the way, guys, just think of it this way. If what we taught didn't work, our members wouldn't keep coming back, especially with the Liquidity Cartography group, which was, it's a higher price. But it's because the information there is legit. It's real information, guys. It's not nonsense. It's not regurgitated BS that you find online. You'll finally start understanding markets, and you'll start understanding why. Or I'm not going to sit there and just tell you, listen, if this goes here, do this. I'm going to explain to you multiple times, so much you're probably sick of hearing it, why that's happening. That way you can start making connections in your head as we continue to discuss charts and ideas. And you can start seeing how it all comes together. And that's the best thing that you guys can do. But anyway, listen, I'm out of here. I hope you guys have a great weekend. Trade safe. We'll be back next Wednesday with Beards and Bitcoin. Don't forget that. And then, of course, next Friday, Fibbo has assured me that rain, shine, snow, sickness, whatever, he will be here. So you guys have to hold him to that, all right? Thanks a lot for joining in, everybody. Have a great weekend. We'll see you later. Take care.
Trading tip: always manage risk before chasing gains.